Hey, welcome everybody to class. I'm going to just open up my screen share and we will start on today's topic. I want to thank everyone for being here. I am your hostess, Mickey Mikeworth, and we are here with Tony Harris as well. Tony, you want to introduce yourself and your program to everyone today?
You can hear me. I'm Tony Harris, and I am a family service worker at Pica Head Start, and we are Newlies for Life. And I take care of homelessness. And we have Mickey joining us today to speak about them. Welcome.
Good, good. I want to welcome the advocates. You guys have a secret power right below you in the chat box. So if you have questions while I'm talking, you can just throw them into the chat box. You can also unmute. I will stop the program a few times during this so that I can get in and ask those questions, but they'll just pop up as I go. Today's topic is banking. In my opinion, this is kind of one of the most crucial things that we can offer low and mid-range financial people, just tools, because banking is really one of the largest things that that people who have low incomes are struggling with. So when we look at banking, what we are going to review today is some of the terminology. We're going to go to the difference between banks and credit unions. And then I'm hoping that we can all leave with some banking goals. When I teach this class live for Pica, one of the things I remind people of is if you don't feel like hugging your bank like a teddy bear, you know, like wrapping your arms around it and being like, I'm so glad you're my bank, you're at the wrong bank. So you want to build financial things around yourself that make you happy, that serve your greater good. And so we're going to talk about some of the things that people have as misconceptions and how banking actually works. So most people are using banking, and most of them are using a check card or a checking account. But what is the reality is that 97% of all checking accounts drain out of all of their money once every 30 days. So that when you say people are living paycheck to paycheck, the bank also notices that as well, is that most people are running through as much money as they put in a month. And why did I choose this topic? I chose this topic because of the amount of people that are unbanked or underbanked. And so when we look at the statistics right now, we have checks that are going out to Americans all over, and they're having difficulty getting those checks because they are either unbanked or they're underbanked. And what that means is that some people who should have a bank don't have one. Some people who have a bank don't have a bank that's actually the appropriate fit for them. And what is very interesting, and we'll walk through it a little bit later, is that study was so, it was so life-changing from 2007 forward that Walmart changed their whole direction of servicing that they would provide to people. If you've noticed, more and more people use Walmart like a bank, but they are not a bank. So Walmart expanded their check cashing and did all of these other things to service a community because how many people don't have the right banking information or don't have the right banking relationship. And that's 1 out of 5. So when you look at that as adults, it's 1 out of 5 people have the wrong banking relationship. That's enormous. So one of the things that I remind people about is what's a credit union versus a bank. And one of the things that is very specific is that one is for profit, which is a bank, that's their purpose, is to be profitable. A credit union is a nonprofit. And that doesn't mean that they're not there to make money. It means that they are there to serve a people, right? That they are served to build a community. And that's always why I prefer credit unions for most people for their everyday banking. And when I think of everyday banking, I think of savings accounts, checking accounts, small loans, car loans, home buying, that these are the things that most people are using a bank for. And a credit union has some real things that aren't great, that they don't have a lot of locations, they're harder to get to. But now that we've moved to mobile banking, that divide between large and small is going away a little bit every time. So a credit union will frequently have very few physical locations. It will have ATM fees. It will have some negatives, but it will also have some positives. And the positives are that the interest rates that you'll earn are higher. The positives are that that you'll get better service, that they have different loan categories for you. Credit unions are more likely to issue loans to students because they're there to serve their community. And so getting to know what credit union is near you is probably one of the first assignments I would give every advocate, is to know what are the credit unions that are around and what are the rules. How do you actually open a bank account and what do you need? These are real basic items that everybody should be able to kind of get at. So FDIC insured is one of the things that people really look for. When we go to some of these other models where it's just on a card, where they just put it on their Green Dot card or something like that. Green Dot is a bank, but FDIC insured basically means that if everything, if the bank itself goes out of business, that the federal deposit, right, FDIC, stands for the Federal Deposit Insurance Company. So what they're just telling you is that there's another insurance company that insures all of the money that's in a bank. They have a different version of this for a credit union, but all of those mainline bankings have an insurance policy that assure that the bank itself doesn't go out of business. We still have to set up an individual account. When you are setting up an account, whether that be a checking account, a savings account, you have to fill out some forms. And now they do them online. But basically, you know, you have to be able to prove your residence. You have to be able to prove your identity. So you're going to require some paperwork. And they're also going to do a check on you. So sometimes when you go, oh, I just want to open an account, how can I get that done? Well, doing it online a lot of times means you're going to have to wait a day, because they're going to have to do the checks on who you are that they could have done in the bank with a teller. They could have done that right on their screen. On a computer, they're just getting the data in, and then somebody has to review that order. So setting up an account during this time is more difficult online, and it usually has a one-day waiting period. Whereas if you had gone into the bank and met with a banker, they can usually set you up immediately on that day. But you got to have an ID, and you have to have an ID that passes their ID standards. You have to have proof of where you live. And the banks have been given a responsibility in the Obama administration that they are now now the identification police. So they're going to ask for ID a lot more, because if you're taking out a large withdrawal, if you're taking out money from your own bank account, they are going to have to be able to prove who you are. So that is the new responsibility of banking. You'll also see more of the tax questions going to banking. Because banking has been given a new role, and that came in the Obama administration. So right now I'm going to go through some terminology, and this is the time where you're probably going to want to take a couple of notes, because it's more complicated than most people know. Okay, so the purpose of a checking account is that it's a deposit account. So that's the first thing that you kind of have to learn, is what kind of relationship are you having with a bank, most everyone is having a deposit account. It's an account that they can go into where they can store their money. They can store it and have it insured against the bank, that they can have a debit card attached to it so they can write a check, they can transfer money between accounts, because it's been proven who you are. They know your identity. They know who you are. You are now, that's why you set up an account. You set up an account because you're setting up a deposit account to do all of these actions on. And that's the point of that, is that it's a deposit account so that you can spend against it. The average person is spending 97% of those dollars. This is why we have overdraft fees, because 3% isn't a very big margin of error. If you're looking to how do you manage overdraft fees, is you stop getting so close to the edge. That's hard to do. So the purpose of a checking account is that it is a deposit account that allows you to do all of these things. Very different than a savings account. So when you look at the other parts of checking, right? And checking is, and this is the first piece when we look back at that statistic of being unbanked or underbanked, this is the first place that families get into trouble, is with that first checking account. Because most people think there's just one kind of checking account. There are 11 different types of checking accounts out there. So deciding what kind of checking account that you have is really important. And so most people are just going, oh, I'll just open a regular checking account. That's not the right answer for everyone. So I just want to remind everybody that when you say, oh, I have a checking account, that for someone like me who's a financial person, that doesn't mean anything. That's like saying I have a car. Well, what kind of car do you have? So we're really looking at not just opening a checking account, but looking at what type of checking account that there is. I'm not going to go through each one of them, but I'm going to just remind you that there's 11 different kinds. So you're going to pick the kind that's right for you. Some of them have fees, some of them pay interest, some of them have minimum amounts that you have to have in them. So some of them have premium offers, some of them have rules. So you'll want to understand when you start that account, why you're starting your account in the first place. And that's true for everyone. So one of the things about banking, and because banking has taken on this role from our government, who has given them that role of proving who you are, or being the entity that moves money at a great rate through its system every day. The vast majority of banking that all of you are using is money that's being that's trafficking towards something. It's trafficking towards gas, it's trafficking towards your kids' clothes, it's trafficking to paying the rent or something like that. 97% of the money that most people put in there, they're going to spend within a few days. So they are really just thinking about it as a high-speed chase, right? Money's in, money's out. Money's in, money's out. That's not true of all types of accounts, but that's what a checking account is. And every financial institution, so the number one, I'm just going to go through 10 quick. So if you're writing a list, if you're that list maker, I've got 10 pieces of terminology. And these I wrote down because they're the very best, they're the most important ones that you should know. And everybody should know what those really mean. And the first one is a routing number. Every single bank now is digital. They all talk digitally. They have all a communications system that talks digitally. And the vast majority of that was put into place just a little over 10 years ago. So you used to be able to write a check and somebody, you know, it took days for that to happen. Now, if you swipe your debit card, you'll get a phone reminder and it's done in 10 seconds. So the first thing that you want to know is that every bank has an identification number, and that is a route. And a lot of times the bank location, the routing number that you get, if you have the routing number that you get, like on the bottom of your check, is sometimes physically based on the actual office you opened it at. So sometimes it's not just, hey, I have a checking account at Wells Fargo. Your checking account may be at Wells Fargo, located at a specific location. So know that that's the first thing that you have to do. Okay.
Eso es la expectativa y eso es la realidad.
Okay, and then I am just going to remind everyone that you do want to mute during class. The second one is FDIC insured. We just talked about that. That is the insurance on the money inside the credit union, inside the bank itself. A certificate of deposit is, again, not a checking account. It's very different, right? This is a deposit account. And that means that you're going to set an amount of money in the bank and you're going to say, you can keep that money for a specific amount of time, but I'd like you to pay me more on it. And a certificate of deposit for people is the first place that they get long-term savings. So the next one on there is APY, and that is the annual percentage yield. And what that means is that that's what you're going to get paid over a year period. So when it says 2%, you don't get 2% every single month. You get 2% over an entire year, and then they're going to divide it up into these little pieces. So the APY is the annual, which is 1 year, of what it's going to get. And APR is the rate. So that is the interest rate that we are often being charged. When people buy credit cards, this is where the mistake is often made, is they don't understand APR. APR will often be on a credit card. It'll say APR, and then it'll have a little star at the side. And that little star at the side means something different. It means that it's the annual percentage rate plus how much the bank is going to charge to loan money. So an APR with a star behind it is something different. So I would remember that, and we can talk about that together. Number 6, compounding interest. Compounding interest has been listed. This is actually why I love finance. Compounding interest is like listed. Ben Franklin said that it is truly the 8th wonder of the world. That it is how things are, it's how money grows. It's the mathematical equation behind how wealth grows. It is so delicious. Once you understand how to do the math on compounding interest, it allows you to understand what your money's value is over time. And time is actually how you make the most money. It's not the money, it's the interest and the time. So paying attention to interest is a big deal, because over time, it consistently puts money in your hand. Number 7 is a savings account. Now, a savings account is, they're going to give you some interest on it, but they're also going to put some rules on it. And that rule is very different than a checking account. A checking account, you're going to decide which kind you want, how many times you want to be in and out of there. A checking account is there to make money move to other places. A savings account is the opposite. The bank will penalize you if you dip into your savings account more than 6 times in a month. So that's a big deal of why people don't just have a savings account that they take money out of, that there's a limit to how many times you can access that account. Number 8, this is where if somebody gives you a bad check, this is where your fee is coming. So a returned item fee. A returned item fee is different than a bounced check. A returned item fee is charged to the person who's trying to deposit the check. So if I have a bad check from somebody that gave me, I put it in my account and it doesn't clear, I'm going to get that fee. Different than an overdraft fee. Okay? An overdraft fee is when you didn't have enough money. And there are tools in the bank to be able to help you through that. So number 10 is checking account. That's what we covered, right? What is a checking account and what does it mean or do? I'm going to stop the share right here to kind of open it up to questions. Does anybody have any questions on just the top 10 terminology?
I have a question.
Uh-huh.
Annual percentage rate. Why is it so low now? Is it based on our economy?
It is based on our economy, yes. So the annual percentage rate is based on the amount of money that is lent from one bank to the other. So an annual percentage rate goes down when bond rates go down. So when the economy, when money is cheap, so is interest rates. Good question, good question. Does anyone else have another question around those 10? Okay, I'm gonna put us back in then. Okay, so you should have this picture of two people who are, you know, lovingly at a beautiful bridge, and that's a joint account. Now, a joint account means that there are two people that own the same money. So that is a really clear distinction of a joint account, that two people own all of the money jointly. It's not a secondary person that each person is listed as equal. So both of them can make decisions on that. You see a lot of this in joint checking accounts where you see two people who are sharing money both have access to the account. And joint checking accounts are pretty common, and they're also one of the first things that happen when people decide that they're going to share money, is they start putting money into a checking account and learning how to have it flow. One of the things that people often forget is that the post office is a tool. The post office, before all of these things were assigned to the bank, they used to be assigned to the post office. So the post office is available to do money orders. They actually have a lower fee than Walmart, but they also can be used to cash specific types of checks. So the post office is part of the United States federal government. So they will take their own checks and they will cash them. So they will take, the post office will cash their own checks if they work for the post office. They'll also take treasury checks. So if someone who doesn't have a bank account, who is underbanked, and they receive a treasury check, which would be a check from, let's say, their tax return, they can still cash that right at the post office, even if they don't have a bank. And that's a really big deal if there's large check places. So a lot of times people will take those checks and they'll go to these check cashing places that'll charge them a percentage. If they actually had a treasury check on that, they wouldn't have to pay any fee because the government's just cashing its own check. So that's a big deal. I hear a question.
I got a question. So you mean to say if I got my stimulus check from the government, I could take that check no matter what the fee of it is, if it's $1,200 or $2,400, and go to the post office and they'll cash it?
They'll cash it.
If I have right ID for free?
Yes. Yes.
Oh, we going to
but
the
you are also obligated to know, right? Here's the dilemma with that in a large number, is the post office might not have that much cash on hand.
Right. I got that part. But
so
the thing is that it's free.
There is no fee.
Part that caught my ear. It's free for everybody.
Right.
That would save a whole lot of money. Because
The-
if you're a low income person and you're cashing your stimulus check at Walmart or at
That's correct.
Unbank or the Mexicano, I forget the name of it.
Right, the Mercado.
That's a fee.
Yes.
That's money. That's like grocery money to me.
Right.
Okay.
Right.
Thank you.
But they're only specific types, right? It has to be a treasury check. So it's not a state check, it's treasury check. So it's got to be federal money. So they're not going to cash. They're not going to cash like a unemployment check, which is a state check. So the other thing about a post office too is that they do have money orders, and some post offices still do third party. So let's say I got a check for the treasury, and they go, oh, I don't have enough cash to do that. What they will do is they will rewrite it into a money order for you. So they will still do that third party at times. So that's another piece that I think more people should know, that the post office is a service to them, and they underutilize it. But you're always, post offices only have so much money in them. So if you've ever watched somebody put in money orders, there are certain times of the month where post office have a lot of money in them because people are sending money to rent, or they're sending money to other things. It's a common place for people to get a money order because it's less money. And it's sometimes it's a lot less money to do a money order there. One of the things that we talked about at the very beginning of this were the statistics around being unbanked and underbanked. So people who are unbanked or underbanked are using other places. And Walmart has been, because of its locations, it has over 10,000 locations that it has rolled out, because they know 1 out of 5 households don't have the right banking relationship. So that they will take whatever is of convenience. And what is interesting about that is that the cost to bank with the services that are at Walmart cost people more. They expire, that you can have an account that you put money in, it charges you every month for that card. And then if you don't use it on that card, there's going to be another fee. So Walmart has taken this, they have partnered with other things. They are one of the prime investors for Green Dot cards. And they've decided that they're going to take that on, because out of that 18%, that 1 out of 5, 11% of them were already in their store. So this was an easy sell for them. So when you look at why are people using so many of the services at Walmart, it's because they're already there. So it was very simple. Walmart has put in some other banks in their locations. But again, understand the purpose of banking. Banking is there to prove your identity. Banking is there to allow you to flow money forward. That when you are looking to prove your identity, you can bring a bank statement. They are going to be able to prove that your money is there. They're going to be able to insure it. And when you lose a debit card, you don't lose all of the money. Whereas if you lose a money card from Walmart, you do lose all of your money. So, and that's one of the other things, that when people are using these other services, that they actually take on more risk than if they had gone through the trouble to get into a regular account. And it's more time consuming to open an account. And if you are someone who doesn't have a legal immigration status, they have to use those other services. But knowing what the choices are, I think, is always really helpful. That they just have to have an ID to open that account. So when you're opening an account, sometimes people are not able to open an account because the account was closed. Minnesota has some of the strictest banking regulations in the state, in the country, which is, right, what happens. And this is the checks system. For those of you who do not understand the check system, this is so critical, because this is your, this is the the checking account police. If you don't pay one bank, they will put it in the check system, and then no other bank will do business with you. If you have failed more than one bank for more than so much time, they will ban you from being able to have a checking account in Minnesota, not for 3 years, but for 5 years. The banking institution can also tell you that they will not bank with you for 3 years, but Minnesota upped that to 5 years. So when you are looking at opening an account and you don't have a lot of money, you're always going to zero, you have to understand the type of checking account that you're opening and what you're putting in there so that you don't get all these overdraft fees. And what are the rules around overdraft fees? So we are monitored by, just like we talk about credit reports, they have one just for banking, and that's the check system. And I put in here the actual address for you, because if you have a problem that you have to actually physically send them that in writing. Hey, I think you screwed this up. This is on my check system. Or, hey, I would like my consumer score. The checking system, your bank has a score on you. It's different than your credit score. And so they're going to ask you to certify who you are, and that you're going to find out, do you owe money to anybody? So sometimes you're not given an account because you haven't, that you owed another bank money. And I think that's why so many people are unbanked, is that they've owed that money to a bank for an overdraft fee and they're still mad about it and they haven't paid it off because it's, hundreds of dollars built up over time. They just keep this pattern going where they just can't get an account. So fixing that is critical. They're going to hold that data in perpetuity. So it's not like it's going to expire. So if you owe money to a bank, you have to pay them, or you have to work it out. One of the reasons I like a credit union is because a credit union is more likely to work with you on how to get your credit working, because they're there to serve the consumer. Whereas a bank is there to serve themselves. They're there to protect you. They don't mind that you're not their customer. You're not their kind of customer if you don't pay your bills, right? So a credit union is, again, a great partner for everyone to kind of start working through, because they will help you work through these types of issues. And when you are physically in the bank and opening an account, one of the reasons that they're opening an account and looking things up is they're checking you out on the check system. They're checking the check system to see if they're allowed to let you open an account that you can draw money against. So I'm going to kind of open this up to next steps on where are you, what do you need to do, and then I'm going to go back in and review from the very beginning, because a lot of you came into class late, and we should really look at what those first few slides are that you missed of terminology and other things. So I'm going to unshare here for a second. How many of you was this completely new knowledge? Anybody have any new knowledge that they saw? Tony.
I learned that the interest rate is based on the economy. If the economy is good, then you get a higher interest rate on your money. If the economy is not good, you get that low interest rate. And that's why people aren't saving money in the bank anymore. They say, well, it's not worth it. But really it is, because the protection plan, the FDIC, the Federal Deposit Insurance.
Right, right. And another thing I want to kind of bring up to everyone is, I don't have one on myself right here, but a lot of times you'll have a card and it will have an insignia on it, like MasterCard or Visa or something like that. The reason that it has that insignia on it is also tells us who's insuring that money that's attached to that draw. So if it has the word Visa on it, there's a different set of insurance on top of the FDIC insured. So there's some consumer insurance on Anybody have any questions on checks, that how we're opening accounts, how you're not opening accounts, or how overdraft fees work? Okay. Again, if they pop up, you can throw them in, but I'm going to go back to share screen, and I'm just going to go back to the very beginning, so those of you who came in late, that you can see the pieces that we had before you got here. So I'm going to kind of scan up here. One of the things that when we look at the data around the majority of people that you are serving, you really have to realize that most of them in that socioeconomic group are unbanked or underbanked. So part of the monetary issues that they're going to have can be solved with quality banking and with quality bank relationships. And sending someone to a credit union is a far better relationship for most people who have who are living paycheck to paycheck, because they have more available product for people who are going through 97% of their money. And that 97% of money going through a checking account is also why people are having a difficult time saving. It is also why your taxes are taken out before you get them, which is why we have pre-tax, why things are taken out of a paycheck before people get them. Whatever amount of money that is put in their account, they're going to need, they're using, and they're using it quickly. When you look at a dollar that's put into a community, there's a whole nother conversation about how long does money stay in a community. And based on your race, that money stays in a community at a different pace from when you're spending it. So this estimate of households of unbanked or underbanked, it's 1 out of 5. But when you look at that 1 out of 5 for the families that you are servicing, it is the majority of the people that you are servicing. So it's not 1 out of 5 in the demographic that you serve. It is far, far, far higher. So when you start to look at where are they banking, how can you have this conversation, what are the relationships that you can build, is a lot of times it's just letting people know that Walmart's not a bank. That there are other reasons for them to utilize that. And it's really to build a partner with a credit union or a banker, but I'm always going to choose credit union over that because of the very basis of why they exist. That the purpose of a credit union is it's a nonprofit. It is there to serve its people. Its board is different, its rules are different, and it has a different capability of offering smaller amounts of money as loans. What we have known for building prosperity, right? If you want to build prosperity in a person, in a business, in a corporate environment, in a state, in a country, they all have the same pieces. It is to increase their ability to trade. If people have the ability to trade, they will be able to increase their own prosperity. So banks are the first place that people are eligible to accept money and to trade on money. So it is the very basis of how you build prosperity for a family, is a quality banking relationship. And when you look at that relationship, I would look at what are your needs? Because there are more than one kind of checking account. The insurance is great, but again, the rules have changed. A bank is now also a place that you can use to prove your identity. So that's a really big deal when you are in places that have floods, or that you have to say, hey, how can I prove who I am? I lost all my identification. The bank still has it. They still know who you are. They know every account that you've done. This is also how the IRS checks to see if if you're having money. The IRS and the banks can have a conversation. So a lot of times if you're having an IRS audit, you'll do it at the bank now. That's a big change in just the last decade. So remember, when you're opening a checking account, it's a deposit account. It's saying, look, I'm going to put this amount of money in here because I'm going to trade. I'm going to create trades all day long. I'm going to trade. I'm going to swipe my ATM card. I'm going to put money in here, and the purpose of that money is so that I can push it around into the world the way that suits me. So that means that you can transfer it. That means that you can wire money. That means that you can write a check, that you can receive money. You know, when you start to look at the other tools that people are using, like Venmo or PayPal or some of these other things, they still want to know who is your primary financial institution. And financial institutions are becoming more and more powerful. We talked about the different types of checking accounts. Not all checking accounts are free. Not all checking accounts are in your favor. And there are 11 different types of checking accounts. So when you say to somebody, hey, you should get a checking account, there's 11 choices there. There's a reason it takes so long for them to figure out what kind of account to have. And who needs to, I need to mute here. So again, just knowing some basic terminology, right? What's a routing number? A routing number for you is also attached to location. So sometimes the routing number that you have on a physical check is different than the routing number that you'll have if you just look up the bank. So if you have a Wells Fargo sometimes has their routing numbers on older accounts attached to the physical location that they opened the bank account at. So if you're looking up a routing number, they oftentimes will give you, and when you open the account, they'll say, and here's our routing number, because they want it to come directly to that location, not just to the big name bank. The routing number is also why when you are giving your information to get your paycheck sent, that's why the routing number is so critical, because it's going to exactly that bank location, not just the big banking system, and then it's going to get into your account faster. Routing numbers are how all of you who are doing automatic deposits of your paycheck, that's also why you get paid faster, because it's going right from the account to the bank itself. An interesting fact about those of you who are choosing to deposit your checks automatically, I do want you to know that it takes 10 days to change it. And the reason it takes 10 days, so like let's say you go, oh, I changed banks. I get paid in 3 days. Well, you've got a problem, because the banking, the way the paychecks work is that the person who's sending the check to payroll, they're always 2 weeks ahead. So that money has already in the payroll company and ready to go out into that system 2 weeks before you're actually paid. Because every company has an average payroll. So when you're asking to change it, they actually have more work to do. It's not like you can just go down to HR and say, can you change my routing number? That they actually have to go to the payroll company has to change it for the next deposit. So you need at least 10 days for that to happen. So a routing number is a critical number to know. It is also how you'll do all your investments, how you'll do other things. So an incorrect routing number will bounce money back, and then it's going to be held in that way until somebody can figure out what's wrong. So getting your routing number correct is really a critical item. And you should know your routing number, especially for your main location bank. It's as important as an address. It's as important as your account number. So you should be able to do it. You should be able to find it. FDIC insured, we talked about that. A certificate of deposit is just another way to hold money at a bank to get a little more interest. That for most of the people that you guys are serving is probably going to be the first way that they have long-term savings, is that they will get a little bit more money on their money at the bank if they let the bank hold it for 6 months or 12 months or 3 years. Tony, like you had asked about interest rates, when the economy is bad, a certificate of deposit doesn't look that great. When the economy is going well and money is more expensive to borrow, a certificate of deposit is very nice. A certificate of deposit is also how most banks are managing the car loans at their location. Car loans are traditionally given out of money that's already in the bank itself. We talked about APR, annual percentage rate. That is, right, the amount we talked about, right? There's a different one. APY is the yield, okay? APR. So we mostly see APR in context to a loan or a credit card. Remember, if it has a little star at the end of APR, that means there's an additional charge. So you need to be very careful when you see those 3 words, because they mean something different when there's a star at the end. And what that means is that there's additional fee. There's an additional fee on the annual percentage rate. And that is the cost of borrowing on top of it. So a savings account, the thing that we want people to remember is that you only have 6 things you can do to that account in a month. That is it. So you can only take 6 withdrawals. Now you can deposit money every single dang day of the week. So you can have money go into that thing as many times as you want. You can do it 10 times a day if you wanted to, but you can only take out 6 times. So if you are putting money in, if you're somebody who is underbanked and only have an account that is a savings account because you've been barred from checking, know that they can only take out 6 accounts. So they'll frequently just take out a lump sum and then go take that pile of money, right? They'll have their check go into the savings account, and then they'll walk over and go, I need to take out $3,000 and pay all my bills. And then they'll go make money orders from there. Or they'll ask for a counter check. But savings accounts, again, that's the critical item. Most people don't know that until the savings account won't let them take out money. So if you're at an ATM and the ATM only allows you to take $20 out and you decide that you need 100, well, you've used up 5 of your 6 withdrawals in the entire 30-day period. A returned item fee is when people have given you a check that's bad, the bank is going to charge you for that as well. So you end up with what looks like an overdraft fee. We talked about checking accounts. Joint accounts are 2 people who have equal ownership of the money that's inside. A joint checking account can be between brother and sister, mother and child, husband and wife, grandma and grandpa. It can be multi-generation. It can be 2 people. It can be a business. But the piece that people need to remember is that joint accounts mean that equal ownership is there. Everybody owns, each person owns that money and can make trades on it. So when you see people who say, hey, that person went in and took all the money out of the account, well, if it was a joint account, of course they can. So I always remind people, everyone should have, if you're a family and you're sharing money, and there's 2 people leading that family, there needs to be 3 accounts. There needs to be a joint account and each person needs to have their own individual account. Because if something happens to one of those accounts, they need to be able to rely on another account number. We talked about the post office as a tool. We talked about Walmart as a tool. We talked about the checks system, and I think that's when everybody kind of came in. So I'm going to stop sharing and just kind of go through here of anybody who's eligible to go, what are you taking away? What are you learning today? Sandra, I'm going to start with you because I watched you write a lot of notes.
Okay. Hi, everyone. Yeah, I learned that I don't have to take money from my savings.
Right?
Yeah.
Yeah, that's a good one. Okay, Saharla, what are you taking away?
You can only take six times from your savings a
Right.
month.
A month.
A month.
That's
Yes.
a big deal.
And there, and there is 11 different account of checking account, 11 different kind.
Yeah, yeah. And do you both use banking regularly?
Mm-hmm.
Yeah. And do you like your bank?
Wells Fargo is okay.
Okay. Sandra, do you like your bank?
Yes, I like it. And now I have the app in my phone. It's easy to deposit.
Right, right.
Check, I deposit for them. Yeah.
Yeah. And I think that's one of the biggest changes, right? Is that we can do things from our phone now. Tony, what are you taking away?
I'm taking a couple of things away. I'm going to not keep all my money in my lunchbox. I'm gonna put it. I'm gonna break down and buy me a certificate of deposit. I understand better now. I forgot about the annual percentage rate and why it's so low. And then I'm going to open a checking account at the credit union because they'll treat you better when you need to get a car loan, or if I want to, I'm thinking about getting a home equity line of credit on my home. And so I think they'll treat me better than US Bank. Even though I'm with Sandra, I can look at that bank account on this phone. I've gotten better with using my phone, and yeah, that's what I'm taking away. This is
Good.
a good thing. I really am glad that you did this today. Thank you so much.
You are welcome. Now, so I'm going to start to go around. I don't know if everybody else is available to jump in. Jennifer, are you able to jump in and tell us what you're taking away today?
I'm taking away, I didn't know that you could cash treasury checks at the post office.
Right.
That was good to know. My mom, she lives in Georgia, and she mails my children's birthday presents as postal money orders. So I know you can cash those there for free, but I didn't know about the treasury checks.
Good, good. And are you enjoying your banking?
Yes, I have my own U.S. bank, and my son has a U.S. bank account that I'm over for him because he's 16.
Good.
And then I have a Wells Fargo account too.
Good, good. And so you guys have a joint checking? Is that how you do it? Or
yes,
custodial?
because he's because he's 16 basically, yeah. But he gets his paychecks deposited into his account, and I mean I can able to just monitor his account to make sure he's not spending his money on dumb stuff.
Right, right. Parenting is still great. Great. Well, thank you.
Yeah.
Blanca, are you able to jump in?
Thank you.
You're welcome. Yeah, I don't know if Blanca's going to be able to get us on her iPhone. Maribelli, are you also able to jump in and tell us what you've learned today?
No.
Hello?
No.
Oh, no. Okay. All right. Newbie, are you able to jump in and tell us what you're taking away? Or Jacqueline?
Yes, I learned that you mentioned the last part that you mentioned that we need to have joint account and personal account for each other. For example, in my family, I have my account and my husband has his own account. We don't have joint account, so I believe that would be a good idea to open a joint account.
Yeah, the joint account for you in that case that is very helpful is it's a place to have. It's a place to put money that you guys are putting stuff in together. So a lot of times people with two accounts, they're actually sharing the bills anyway. But it's a way for you guys to have an account that you can access in case there's fraud on either one of your accounts. So that's where the real benefit is for everyone, is to have another account that they can access when the bank freezes your account because there's been fraud. So yes, if you only have one checking account, you better figure out where your next one is. Because when they freeze your account, it's a minimum of 3 days and you can't go in or out of it. So that's a big deal. So good for you. Is it Rhinese? Rhinese, are you able to jump in at all?
Can you see me? Can you
No,
hear
but
me?
we can hear you.
Hi, guys. So
Hi.
I did come in at the tail end. However, I did see that you were speaking about the APR. I'm just now getting the knowledge about that. So this was really helpful, you know, with learning about these APR, how high they can be. Like, these percentages are ridiculous.
They're ridiculous. Yeah, so if any of you know who Keith Ellison is, that is the department that we have to really fight for. So I remind everyone, just send Keith a note. The laws were pulled away from you in the Bush administration of protection around that APR. Minnesota used to have, for years and years and years, a limit of how much interest can be charged to Minnesotans, and that used to be 20%. That was removed, and and that is one of the pieces that I'm just telling everyone we've got to fight for to get back, and that would be Keith Ellison's office of consumer protection, is that we need that back, where Minnesotans charging more than 20% to someone who lives in the state of Minnesota should not be allowed anymore.
Right, definitely. Well, thank you so much.
You are welcome.
My video's just not working. I tried to make it start like
Well,
3 times.
we're glad you're here. We're glad you're here. So anyway, the things that I'm hoping that you'll take away from today are just a reminder that the majority of people that you are serving come into a category that really need banking help, that they really need to understand their banking, and they need to understand the different parts of banking and what is a bank and what isn't a bank, and what is a card, what isn't a card, what are the protections that are there for them and what are not. So banking is the first very basic tool in wealth building. And it will also be the first tool in stabilizing people. So having a bank account is not a small deal. It's a big deal. So for those of you who have one, thank you for doing that. For those of you who open them for your kids, thank you twice. And you know, if you have any other questions, you can just come back to class. Any final questions before I say goodbye today? All right. Be well. Happy banking, everybody. I'll see you next time.
Bye-bye.
Bye.
Thank you. Bye.
Thank you.